we are now joined by a banking expert. We have Mr. Hemendra Hazari now joining us. Thank you so much, Hemendra, for being with us. You know, there was a lot of buzz about some M&A action for some of the private sector banks. There was this buzz that Kotak Bank may be looking at a buyout target, and buyout target could be a bank, could be an NBFC. We certainly haven't heard an announcement so far. And today we are seeing Kotak Bank higher, but Axis Bank is trading in the red. What do you make of all this talk about mergers? And do you think there is some relief that Kotak did not announce any merger plans?
See, in retrospect, it is very clear that because of the lack of content in business media, this whole Kotak Mahindra press conference was overhyped. And actually, it should have just been done by the head of their retail banking. So we've just given them very free publicity for the day. Now, the strategy, of course, of private banks, of taking over other private banks in this country is not easy, because in some of these older private sector banks, which I believe should be up for sale, it's very difficult because they've got a very fragmented shareholding, and therefore it is normally very difficult to get a big chunk of their shares. So we have to wait and see whether these older private sector banks, which are normally considered to be the targets, can you really take them over? Secondly, even in a hostile takeover, it's going to be very difficult because you need the full backing and support of the Reserve Bank of India. And if you have a hostile takeover, the Reserve Bank of India has to justify to the public why a particular bank can successfully do a hostile takeover. So all these ramifications are there, which makes it very difficult to undertake M&A in the private banking space as well.
Right, but when you spoke about the old private sector banks, what would they bring on the table for the newer age private sector banks? We saw the merger that took place between Kotak bought over ING Visa. Now they got reach in South India. There are a lot of human resource integration issues that it's still looking to resolve. So what do these older private sector banks bring on the table or give the new age banks?
See, there is this entire debate whether a branch is actually, relevant in the banking industry today. We've seen over the ages it has gone through various cycles. At times, banks believe that a branch network is necessary, and they then, they expand. And there are times when they believe that the digital is the only way out. So that has to be seen. But in India, if you wish to go below the creamy layer of society, you have to have the final touch point for customers. And therefore, the branch network for such a strategy is extremely relevant. Now, some of these old private sector banks are highly localized. So if you wish to tap into that kind of clientele, then you need the kind of branches which you require. But there again, you see, banks have to take a call whether they believe in an expansive branch strategy or they believe that digital is the future.
What do you think is the future then, Hemendra? Do you think what Kotak Mahindra Bank announced a day earlier, a big focus on digital banking and how that will lead or power the growth from here on, is that the way ahead? Do you think then bank branches become less relevant?
You must understand the philosophy of Kotak Mahindra Bank is that it has started its inception as a bank which caters to the super wealthy, those associated with the cap stock market. So it is on that, and then they serve as a large investment bank as well. So very clearly, so far their clientele has been to deal with the very high income segments of Indian society and with corporate India. Now, if you continue to have such a strategy, then yes, that digital makes sense. You may not require a widespread branch network, but if Kotak Bank decides that they want to diversify that strategy and they want to step down and go into the lower income segments, because connectivity, all said and done, is still a major issue in the rural hinterland, then you'd require a branch network. But this strategy of Kotak about going all the way digital and whether he believes it can be made profitable, to me it indicates that he still wishes to cater to the super wealthy and the high income segments in Indian society.
But if that is the strategy that Kotak has, isn't that growth then going to be coming at a cost which will be lower than the brick and mortars business? Even if they don't reach out to the masses and they continue to grow their business in their traditional clientele, isn't then the incremental growth going to come at lower cost?
Sorry, can you repeat that question, please?
Taking from what you said, if Kotak Bank wants to grow its traditional customer base using digital banking, isn't the incremental growth going to come on lower cost then?
No, it should. But we have to see whether, how far and what kind of volumes they achieve on digital. Because if the existing high net worth clientele decides to shift to digital, we really don't know what all the products they're going to offer in digital. Then they'll be cannibalizing a lot of their highly profitable business. And normally Kotak has been extremely focused on profitability, like most new private sector banks. So we have to see what kind of volumes he generates, on such a strategy. Now, if he gets, the essence is you've got to have very high balances of saving accounts. For example, 2 years ago, the average balance in HDFC Bank was about 52,000 on the savings bank. So you have to generate very high balances for you to make money, because you're not going to do any charges on the digital side of the business. So again, you have to cater primarily to the super wealthy to get these large saving balances, average balances.
Right. Hemendra, the consolidation that people are watching out for even in the banking space, was it going to help with the bad loans problem at all? A lot of mathematics and ratios were being compared that should Kotak Axis merger happen or a takeover happen, would it really have led to any improvement in some of the bad loan ratios at all?
To understand this issue, you have to understand that the bulk of your corporate NPAs, which is the bulk of the NPAs in the system today, are concentrated with very few very large projects. Now, such projects, it is very difficult to recover cash, because one, a lot of the monies have been siphoned off to promoters, so the asset is fictitious. Two, the sheer size of the project means it's very difficult to get another buyer to purchase it and to run it. Therefore, it is one thing when you are doing bad asset recovery for small companies, small accounts, and it's quite a different game altogether when you're taking over very large projects and trying to recover monies from them. Now, in my opinion, Kotak has been successful in the smaller size, ticket size accounts. But on the larger size, accounts, you require the state's help through its enforcement agencies if you really want to, recover monies and, manage these assets profitably.
Right. So, what do you think is the need of the hour for getting some of these NPA issues resolved? Because that is the focus of the government. Do you think a bad bank will resolve the problem, or the government will really need to inject a significant amount of equity into some of the PSU banks?
See, in my opinion, consolidation is not the solution. The solution is that you have to recapitalize the banks to the fullest extent possible. You have to go strictly and, put the whole state's machinery at the disposal of asset recovery. With these two, measures, you can recover the monies as well as recapitalize the banking sector. But without that, and to, say that we require consolidation, it becomes a useless exercise in my view. At the end of the day, even if you have a bad bank, somebody has to fund that bad bank. And we've seen how miserly the central government is when it's coming to recapitalizing its government banks. So it is very clear that there is going to be no major recapitalization done, and therefore the banking sector is going to continue to rot.
But we need a thriving banking system if growth is to pick up. So what in your mind is going to be a workable solution for the government?
See, looking at the objective of the government, is like they seem to have some kind of plan to privatize the entire, government banking sector, because they are starving it of capital and then telling them they have to, raise resources, and for that, they're on their own. Now, my issue today is which private sector entity would like to take on this risk when the economy is in a slowdown mode. You see, if the economy was up, in an upswing, then, private sector could take that risk. But on these large projects, it is very difficult to turn them around without the state's help. So, to me, it looks like we're just in for a long period of stagnation. Now, the stagnation in the Indian economy has been going on for the last about 4 to 5 years, despite what the levels of the stock market are. So therefore, we have to be prepared for that. I really don't see any major solution to the banking problem that we are in, because the government doesn't seem to be wanting to really do anything about it.
Right. Hemendra, in such situations, don't you expect M&A? Banks that are trading at very high valuation will use their stock as the currency and probably look at a share swap deal?
Yeah, that's one thing. In the private sector, that may be possible. Of course, as I said earlier, that there are problems there because a lot of the old private sector banks, the shareholding is very fragmented. In the government banks, I really don't see consolidation happening without recapitalizing these banks. Because whatever few strong banks that are left, and I really don't think there are any strong banks left in the government banking sector, you're just going to make them weaker through consolidation.
Right. In terms of capital allocation, as of now, a little bit of roadmap has been also provided. You don't think that's sufficient?
So what kind of roadmap is this? 10,000 crores is your recapitalization for FY18. Just look at the Kingfisher account. The Kingfisher exposure to the banking industry was around that amount. And today there are so many large corporates with exposures of 30 to 50,000 crores which are in deep distress. This figure is a drop in the ocean. It is a totally meaningless number.
Right. So that's why you're not. That's why you believe that there would be much more which will be needed.
Yes, but that requires a massive expansion in the fiscal deficit. As I said, if you really want to be serious, you have to recapitalize the entire banking sector by about 100,000 crores, which no government would like to take such a bold decision, because that would lead to a credit downgrade by the global credit rating agencies.
Right. Creation of bad bank, taking a haircut. Don't you think these are solutions which could take that number down?
See, these solutions look very good on paper and very nice to discuss in air-conditioned business TV studios. But actually, in the end, somebody has to pay for it. Now, when you decide a haircut, who's going to pay for it? The banking system today has got an acute shortage of capital. So you can talk about haircuts, you can talk about, taking over bad assets. End of the day is, do the banks have that required equity capital? And in my view, they clearly do not.
Right. Let's talk about the overall earnings. Yesterday, Uday Kotak, of course, had the press conference where he mentioned that, there has been a pickup as far as Feb and March activity is concerned in terms of corporate activity, in terms of the transactions that they are seeing. Don't you believe that if earnings pick up, there would be a lot of recovery, so that number could come down substantially, what happened in 2002, 2003?
See, I've been hearing this story, and as well as you being a TV anchor, I've been hearing this story from numerous commentators, that don't worry, recovery is going to come in 1 or 2 quarters. And we've been hearing this story very, very consistently for the last 4 to 5 years. But has that story really materialized on the ground? Sadly, no. So every time when we are in, we have been in the slowdown mode for the last 3 to 4 years. But every time, in TV studios, we keep hearing the comment, oh, don't worry, there's going to be recovery. You look up at one particular segment like a 2-wheeler sales or a 4-wheeler sales, or somewhere in the economy where something is perking up and says, here are the green shoots. But actually, it has not resulted in the end of the day in any macro improvement on the ground. And if you see the IIP movement today, it is lower than what it was in last year. So it just tells you that things are actually not improving, they have been deteriorating.
So you are saying that only when the earnings come, we should take a call on that front?
No, market normally reacts before the earnings results do come in. But the point is, the way the market level is going is because of liquidity, and to me it has nothing to do with the fundamentals. Because, as an analyst, I've been reading reports, I've been also contributing that, hoping that recovery would come in, but nothing seems to happen. So that is the issue. Now, yes, markets will react before the data comes, becomes visible or is disclosed. But what we have seen so far is that it's always very illusionary. It's a mirage. And we just like to be optimistic, for everybody to feel happy. And we keep saying, don't worry, the recovery will happen. Now, if you look at even the new government, which has been in place for 2 years, it has undertaken a huge amount of reform, just what the market wanted. But sadly, it has not improved things on the ground, except the only improvement has been the GDP data, which a lot of people view with suspicion. But if you look at, corporate India, corporate sales, corporate profits, the bad debt issue, critical industries like steel or cement, nothing seems to be really moving. So on the ground, things are extremely bad, and especially for the SME sector. And the SME sector is going to take a huge negative knock with the implementation of GST. And the SME sector has far more employment than the large corporate sector. So there's going to be a lot more difficulties coming in, which, as usual, the market doesn't take very seriously.
Right. The point that you're making that, there could be mass scale unemployment, which means that retail banking, the way it has been growing and the competition that is there, now some of these banks for growth will actually start taking risky assets?
See, firstly, this whole retail liability side is you're dealing with the premium people in Indian society. And that has been the very clear-cut strategy of the new private sector banks. They have concentrated all their business in metropolitan India. And that is why you see, if you see their average saving balances, it's significantly higher than the government banks, because the government has deliberately allowed them to have such a highly profitable strategy. Now, you can continue with that strategy, but of course, then the growth becomes an issue when the overall economy is not growing. Or, both the Congress and the BJP governments have actually implemented strategies which actually widen income inequality. Therefore, it is possible and very relevant that even when the economy is in a slowdown mode, the high income segments in society actually continue to do well because they have the full support of the government. And that is really the success that you're seeing in the new private sector bank strategy. Now, if this kind of policies continue, where you concentrate your efforts on, widening income inequalities to, drive your growth, then you can continue with such strategies and you can continue to have a niche of banks which only cater to their requirements and they can do well.
Right. In terms of consumption pickup, at least on the durable side, do you expect the growth that was there in the last 5 years to continue? At least that section of the society is delivering earnings?
Yes, but what you have to see just how they recover from this demonetization. Because if you see the FMCG segment has not been doing well as a broad segment for some time now. And the FMCG segment really is a segment of items of mass consumption, which tells you that the masses are really not doing so well. On the other hand, if you see the way four-wheelers have been growing, these are slightly items, of higher income consumption, the segments. So that seems to be doing well, and that, supports my thesis that it is your government policies which encourages the widening of income and wealth inequalities, and therefore those segments do well, and while segments of mass consumption do not do well.
Right. At least those segments would not see a big problem as far as numbers are concerned. So there may be a marginal decline, but again, you don't really see investors being worried because investors have supported these companies which are strong ROE companies, even in bad times.
See, today, if you look at the level of the market, investors have supported this entire market with no fundamental reason, according to me. So that is a separate argument altogether. It's got to do with flows. But what we have seen is that they have come to such a segment, the high income segment actually dictates government policy both in India as well as globally. So as long as you continue with such policies, they are going to enrich themselves, and all of us investors will also do well because we can continue to buy into these companies, and with this high liquidity, we all can do very well.
Any top picks that you have? Earlier you have suggested some names in the consumer durable pack earlier. Any names that you like now?
Yes, I would like, especially suppose, industries like the paints industry, because the oil prices are coming down. Oil is a major input for them. So anything, where oil prices are a depressor and they are, the output is a branded output which can take, can withstand price corrections. Such industries, in my view, can do well. So therefore, one of them is the paint industry. And therefore, they also have, low debt levels. So such things, to me, should be promising.
Right. Any other names from the banking space? Anything looking interesting?
Well, banking, it depends. Off late we've seen PSUs doing well, but that to me has been a bounce back.
PSUs doing well, you mean
on the
share
stock,
prices?
The share prices.
Not the numbers.
See, today, frankly, nothing is doing well on the ground. Let's be very clear about it. There are very few companies or very few sectors which on the ground are showing any great growth. But on the stock market, yes, PSUs have been doing well. Now, I would really hope that the government can do a massive recap, because that to me will be a major fundamental trigger for not only for these banks, for the entire economy, but that you require tremendous spine to take on global capital, which really no government in India of late has had that. So if they were to do that, then to me that would be a real major fundamental trigger for the improvement in the entire economy, the market as well as in banks.
Right. Hemendra, thank you so much for taking out time for us. Always good to get a perspective from you.